All right, so I just wanted to make this video before FOMC tomorrow. The Fed is meeting tomorrow at 2 p.m. Eastern time. They're going to be deciding whether to skip rates or raise rates. Now, I'm going to tell you what I think and why the daily on the S&P 500 as well as the NASDAQ, the daily charts don't look that great. And I do think that there is some more downside for September. I'm going to keep my covered calls open. I currently have covered calls on my SPY shares. This will protect me in the case of more downside on the S&P 500. Now, I don't think we're going to dip back into a bear market unless we get some sort of credit event, which would honestly be a black swan. So it's something that we're not going to be able to predict anyway. But I'm definitely looking forward to the month of September to continue its downside because I want an opportunity to sell more cash secured puts. If you want to learn how to sell options for income, sell covered calls, sell cash secured puts, Poor Man's Covering Calls, I suggest that you click the link below and get on the mastermind waitlist. We are doing this for October 3rd. Once waitlist spots are gone, they are gone. So make sure that you get your name on the waitlist. Option selling is just one of the things we cover along with futures trading, along with day trading, technical analysis, and I go over my exact strategy. All right, so let's get right into it. Why do I think the Fed is actually going to skip? Well, if you look at the FOMC watch tool, the Fed is actually 99% likely to skip this month, skip a rate hike this month, according to futures funds traders. Now, I don't think that they have ever been wrong when there is an overwhelming majority betting a certain way. So over 80%, I don't think that the Fed funds futures has ever been wrong since the Fed started hiking rates in 2022. We also have conflicting decisions from different banks that are allies of the United States, such as Canada, who really voted to pause rates, and the ECB, the European Central Bank, voted to raise rates once again. So here's what I think will happen. I think that the market is asked out regardless of what Jerome Powell decides. And like I said, we are going to get into the charts in a second, and I'm going to be providing you with analysis. So you definitely want to stick around for that. But I think that the markets are asked out for the month of September. Like I said, I don't think we're going back into a bear market, but I think that because the Fed pause is expected, I think that is going to be a sell the news event. And if the Fed hikes, that is going to be unexpected, but it's an unexpectedly negative event. So I think that the market will tank anyway. I do think that the market will tank more if the Fed actually decides to go against the grain and hike. But I do think that we are going to get some sort of sell the news event. Now, on the day of FOMC, every time I go live, and I'm going live, by the way, so make sure that you set your calendars for 2 p.m. Eastern time on Wednesday because I'm going to be going live. But every time the Fed is live, or every time we're live for the Fed event, I get people saying, why is the market going up or why is the market going down? Obviously, always ignoring the fact that the initial reaction does not mean that that is the reaction that is going to last after the event, right? So let us take a look at the charts right now. God, I cannot get over this background over here. I'm in Sicily, by the way. So if you guys have a chance to come out to Sicily, make sure that you come out to Palermo, Sicily, because the views just from every angle are unbeaten. That's neither here nor there. Let us take a look at the charts real quick. All right, as you can see here, like I said, the Fed watch tool, the Fed funds futures bettors or traders are betting a 99% likelihood that the Fed is going to keep rates unchanged. Now, I think they're going to keep rates unchanged because if you look at the last CPI report, which came out last week, the core CPI was actually in line year over year. Now, it came in 0.1% higher, but it came in line year over year. And I think that Jerome Powell and the Fed, they are likely going to use that as the excuse to keep rates unchanged for now. Now, they're not going to say that, hey, we are going to pause here and never hike again. They're going to stay with the tough talk, in my opinion. They're going to stay with the tough talk and they're going to say that inflation is coming down, that it's slightly ticked up, but core is in line with year over year, and that they're going to be data dependent. And that is what's going to determine on November 1st whether they raise rates or not. So they're not going to go easy. They will likely skip, but they're not going to go easy, in my opinion. Now, here's why I think it is bad for the NASDAQ and for the S&P 500. Not when I say bad, I don't want you guys to like freak out. I'm not saying a bear market, but I called this out weeks ago, maybe a few months now, saying that we have a head and shoulders here on the S&P 500. It's clear as day. I don't even need to draw it. Unless you guys really want me to draw it, then I'll do a very rudimentary job of it. Here you go. This is it. But also we have this fair value gap. Now, if you don't know what a fair value gap is, like I said, I will be going over my exact strategy in the mastermind. So make sure you click the link in the description and join the waitlist for the mastermind, or click the link in the description and join us for the monthly, or both, right? So just come into the academy and learn all these things. So this fair value gap, the fact that we did not reject from here, what you want to see from a bullish fair value gap is you want to see price come into the fair value gap and then reject and go higher if it's a bullish fair value gap, the opposite if it's bearish. But in this case, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 ticks into that fair value gap, and then today, as of the time of this recording, the S&P 500 is currently trading below it. So NASDAQ is similar, although the NASDAQ is not yet completely below that fair value gap, but you see it here as well. So I do think that we will see more downside, and we do see a head and shoulders on the NASDAQ as well, as you can see here. But I do think we will see more downside. And like I said, on the S&P 500, my goal, the ultimate goal will be if we can get to the 430 range would be nice. But really, if we want to have a true buy the dip opportunity where we cannot wait to buy the dip, in my view, it'll be around the 405 to 415 range, right? But I will likely start selling puts or something depending on how this move looks at around the 430 range. Maybe we'll see. I will definitely be sending these out in the academy. Also, just looking at the core as well as the CPI, the Fed tends to pause every single time they're in a rate hiking cycle when the Fed funds futures rate is above both core and headline, which it is now. So like I said, I do think we are going to get a pause. Whether the Fed raises on November 1st or not, I think really depends on CPI and also depends on rising oil prices. Oil is going absolutely insane. We have hit the $92 per barrel mark. We will likely go to the $100 per barrel mark, which is wild because oil was only $65 a barrel just a couple of months ago. And because of some geopolitical events between Saudi Arabia, Russia, etc., and them cutting production, oil is now just taking off. Now, this is crazy news because the bond market is broken in a way that we tend to see before recessions, and oil is running in a way that we tend to see before recessions. So the last shoe to drop, in my opinion, will be unemployment. And if unemployment starts spiking past 4%, then I think we will get closer to a recession. I do think it is almost a certainty we will hit a recession come 2024, and that is when the Fed will actually start cutting, is 2024. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up. Look at these houses back there, man. That's crazy. Leave it a big fat thumbs up. Make sure that you are following me on Twitter and on Instagram, where I post free daily trading and finance content. And on Instagram, I do post a lot more travel content as well. So if you want to see more content from these lovely hills of Sicily, make sure you follow me on there as well. Subscribe to the channel, hit that notification bell, join the mastermind waitlist, join us on the monthly. Link is in the description below. You might find a coupon code there somewhere. Stay safe out there, traders. Peace.